Everyone, welcome back to the Market Chat. My name is Richard Moglen, and joining us today is the IBD News Editor, Ed Carson. Ed, thank you so much for taking the time to speak with me today, and welcome.
Yeah, Richard, thank you so much for having me.
Perfect. So to start things off, I always like to hear about people's backgrounds, how they got interested in the stock market, and yeah, I'd love to hear about your journey as a trader, and also how you got involved with William O'Neill and Company and Investors Business Daily.
Sure. I was working for Reason Magazine, which is a libertarian publication that's based here in LA. And honestly, through various ways, I met up with some folks at Investors Business Daily, including one of the people who started at IBD even before it actually had started. He was actually hired before then, Terry Jones, who just retired. And I moved over in 1997 and started on the New America page, which is where a lot of people started off. Worked for Chris Gessel. He was New America editor back then. Worked on the economics team for a little while. Worked on the markets team, but that was a little bit different back then. We weren't, while we always talked about CANSLIM, I don't think the markets team as a whole really understood CANSLIM as well as the markets team does today.
Right.
I think it was an issue there. So I think it's a great team right now. And then I became a news editor, and basically I've been doing that since 2000, 2002. And, so I've been doing that, and I started trading fairly quickly in 1998. There were some big moves, 1998, 1999. I made some big money. Oh, here we go. It was easy, and then the 2000 bust came. I lost a fair amount of it because I didn't know what I was doing, and I made money again in the aughts, and then I blew up. I blew up bad in 2008. I didn't know, I froze. I did everything. I was stubborn. I had done too much research. You don't want to do too much research. You want to do enough research that you know stuff about it, but you don't want to start thinking that you're smarter than the market. I thought I was smarter than the market, and I was not. I was really not. And I took quite a bit of time off, partly because I was focusing on my kids.
Right.
I was focusing on soccer practice and other things, and I was psychologically damaged. So beyond the capital loss that I took, I was damaged for many years. I didn't want anything to do with it. Whenever I tiptoe in, I would screw up and do something. I didn't have no confidence. And so it was really only around in the 2017, 2018 that I got back into investing, and started small, and things have gone relatively well since then. 2020 was a great year, but you could almost, that doesn't mean I was a great trader. I was looking at some of my trades preparing for this, and it was like, why did I buy that? And why did I buy it then? And why did I hold it? And it worked.
Mm-hmm.
And it worked because, you can get away with anything back then. So, IBD Live has been really helpful since that started a couple of years ago. It really got me focused. Hanging out with it. I think it's helped everybody on who works there, because we're really evaluating it. So that's sort of my journey to a certain extent. And so it was a long journey, and it's like for all my time at IBD, I really haven't been trading for much of it. I feel like it's I've gotten a lot better in the last few years. I'm trying to stay humble, knowing that 2020 was not usual.
Right.
I'm trying to remind myself how much I screwed up. And, I think it was Mark Minervini, you can make all these gains, and then if you lose it, it doesn't matter. It's only, it doesn't matter if you lose it all. So you've got to have that strategy of getting out. And that's still something I work with. And so anyway, so I'm not an expert trader like many of the people you've spoken to. I definitely work in progress for sure.
Yeah, but I think you've said a bunch of things that a lot of people can relate to. Taking financial losses is one thing that sets you back, but it's really, like you said, the emotional side of it, where you take a little bit of a break because you took some losses that didn't have a great experience with the correction. When you get back in, if you take a loss again, you're kind of psychologically damaged, and you're not willing to take those risks that you need to regain that confidence. So I think a lot of people can relate to that. And I did want to dive in a little bit to IBD Live because actually over at Trailline, where I work with Ross Haber and Ray, we actually do a very similar thing. We hop on Zoom at the open, talk through what we're watching, what's on our focus list, and yeah, help each other out. And it seems like yeah, I've tuned into IBD Live, especially when Mark Minervini, David Ryan, Ross when he's on there comes on, and it's awesome to see everybody's perspective. But yeah, I'd love to hear about the backstory of IBD Live. How did that come about? And yeah, how that's helped you personally and the overall experience with that.
I mean, it was Chris Kessel's idea. I don't know exactly all the reasons. It was like, well, wait a second, we're constantly chatting in the market. And this is back when we were actually in the office.
Right.
But we'd be in the office and talking back and forth. Hey, did you see that? Hey, did you look at that? Or what do you think about that? I mean, obviously we weren't spending 2 hours doing nonstop. We actually did some work during that time, but it was realizing, well, I mean, we love to hear ourselves talk. Certainly everybody else would love to. I mean, so that was sort of the thinking on that front. It was just, yeah, that was sort of the origin. I mean, we've obviously done a lot of premium products because investors.com is one thing, but we have all these other products and realize that people do want to have more help. They do like having that community, that interaction. And it was really, I mean, it's really good because I just sort of realizing the momentum, like, when Mike Webster was on or like, and now he's departed, but that was helpful understanding some of the thought process he had and just the different perspective. Like you'll have different people looking at a stock and have, no, I like this, I don't like this, and really back and forth, and you sort of have to think about it.
Yeah.
And you go, oh, I was looking at this, look at this at Generac. Oh, I wasn't even noticing that. I mean, obviously you're hoping that you're noticing all those things, but you're not. So I think it just really helps you keep your focus. And then people's talking about, yeah, you know what, I'm really feeling nervous about this. And it's like, well, wait a second, maybe I should be evaluating, and maybe I'll take a different tack. I mean, not going to just say, well, so-and-so said I'm nervous, so I better sell everything. No, but I think all that back and forth really makes me think about it. Like it opens up new ideas. It makes me question what I'm thinking, what I'm feeling. And I feel like that's really been useful about spotting stocks and getting in and out of the markets better than I have in the past.
Absolutely. And I always say, and there's like an extent to this, but I always say that people should try to find a community where they can bounce ideas off of one another. It's not saying that oh, your friend says buy this, or on Twitter somebody's buying it right there and you go out and buy it. It's like, oh, what are they seeing? What can I learn from that exchange? And I think IBD Live is a good place for that 100%. And I love the Mike Webster stories when Mike was on there. Always a lot of fun. You had to cut him off sometimes, but that was always a good time.
Yeah, it was always fun. And I like the differences when you think about, and again, they'll switch around too.
Yeah.
Believe me, I'm not trying to be like David Ryan would talk about some slower trades and like some longer trades that he would take and like look for these sector rotations. And Mark Minervini was talking about, I'm doing these swing trades.
Right.
I mean, these are two masters. They're both CANSLIM devotees or thinking along those lines. I mean, I know they don't necessarily exactly, but very similar basis, but they're, can take very different styles within that, and and everybody has their own little vein and what works for them. And it's just fascinating to listen to these different perspectives. So yeah, I mean, and all the people on your Trader Lion, those are wonderful. And it just, having that community really, really pays off.
And you mentioned a quote from Mark there, Mark Minervini. What are some key things that you've learned from the guests on the show, or from Chris Kessel or Mike Webster when he was on as well?
It was, and I don't think this was on the show, but it was something that Mike Webster was just talking about in the office. He talked about a diversity of leadership, and it's just like, we don't try to just buy like, oh, I'm going to buy just random stocks and I mean, you can buy the S&P 500, and actually that I wouldn't do too bad in this choppy market, but so I'm not going to, but you want to get leading stocks, but make sure you have some diversity, within that, like, maybe don't have like 4 software IPOs as your holdings, because there'll be days. I mean, like if you have Upstart and some of these others that have been flying, oh, you're the greatest thing ever, you're up 30% in a day, but it's like, you can see how that could turn around very quickly. So go the other way, and especially this year. I think he said it last year, but it certainly pays off this year because if you have I'll have a steel stock, I'll have a bank, again, the ones that are doing well, all these things. That's the way. I'll have an EV stock. I'll have and that kind of mix. and just thinking about how many are reopening plays, how much are pandemic plays, because you can't just think in terms of group, like if you have Zoom video and Peloton, and then all of a sudden everybody's not worried about, they all fall, even though they're totally different. So, I mean, you have to be thinking in that mindset of like, and it's not just that you balance out, but it also means that, to say, like, if you have an upstart, you can withstand a pullback better if you have only some of that. Like, oh, 10% of it is an upstart, but not 50% is in high flying software IPOs that are all now coming down 8%, kind of thing, or 20% over a few days. That's crazy if that's your portfolio. If a stock is up 80%, it comes down because it's a wild high flyer. You can do that because these other stocks are moving up. It's sort of like a sofa that you're trying to move by yourself. You move one end a little bit, and the other one might even nudge back a little bit. Then you nudge the other side.
Right.
As opposed to just trying to, anyway, so that was something I really picked up. And obviously the sector rotation stuff, I tried to listen to that with David Ryan, looking around, which sort of feeds into the same thing, like knowing that things are short-lived, trying to be a little bit more careful when things get extended. But some of these lessons from 2021 may not carry over to 2022. But so that's something else I have to think about. We'll have to see how that goes.
Yeah, I completely agree with you because, yeah, you're going to have those days where your account's up 3-4% if you've got most of your money in Upstart, a firm, or whatever. But there's those stress test days, especially even after we get the fall through day, where those stocks will fall 5% each a day. And that hurts you psychologically, going back to what you were talking about. So it's good to spread out a little bit. Be aware that stuff can turn pretty quickly because it might go higher in the long run, but it feels bad to be down 5% in most of your holdings in one day. So yeah, spreading out to a Generac, which is a little bit slower. Yeah, absolutely.
I was just going to say, like, it's also if like it may, settle down for a few weeks. If it goes sideways for 3 or 4 weeks, if it goes down 10% and then settle down, if all you're holding, you feel like, what am I doing here? But that's where I think it's like, if you have other things that are moving, because these sectors, because then it may allow you, because one of the things is that some of these things, they go up and then they pause, they pull back. You don't want your entire portfolio in that, it just, you can't hold, it just be almost impossible to hold that, but then they might go right back up. Like, things like NVIDIA or stuff. If you had everything in NVIDIA and then it goes into a correction, I don't know. Anyway, those are just things. Those are a couple of things, but I'm always picking stuff up from people and trying to think as long and hard about it.
Absolutely. And we were talking before we press record a little bit about 2020 versus 2021, how you felt like you've actually traded better this year than last year, but obviously last year the market was so strong. So yeah, could you talk a little bit about the things you think you've improved upon, and it might not be showing up in your raw performance numbers because obviously 2020 just everything worked, but you feel like your process is stronger this time around.
Yeah, well, I think I've done a better job of doing early entries.
Mm-hmm.
I mean, I think you sort of have to, but I mean, that's, I'm taking more profits at the top. I've always had difficult, I mean, look, it's much easier to buy the right stocks, or at least buy good stocks. I mean, I don't know, not to buy bits, but so I've done a better job. I'm not saying perfect, but you never know. I mean, if I had sold, I could have sold certainly ones more at the top, but then I don't know, there's a strategy. I feel like I've done that better. And most of all, I'm getting better at cutting my darn losses. That's, again, I'm still terrible I'm not terrible, but I'm still,
working on it.
That's the sin. If I can just cut those darn losses, that's where it is. So, I write these articles, what to do now. And the stock market today articles, they go on and on and on. I write overnight most nights. The what to do now, a lot of that's almost like, all right, Ed, I'm going to look in the mirror. What do I do now? I'm talking to myself.
Yeah.
So and printing it to other people, but I'm really telling it to myself. So it's those kind of things, because in 2020 you get away with it, and it's also, you don't have to make those decisions. Right. Like I owned NVIDIA, and it was really, I bought it like a few days after the breaks out, a few days after the follow through in 2020, and I held it for several months. I sold something around the way, like the stock market was a little here and there, and I eventually sold out around September, I think. That's fine, but I made this huge, and I didn't have to make any decisions. It just kept going up, and it was nice. If you can sit there and let your money work, it's like I didn't even have to try, and so it wasn't just that bad decisions turned out well, but I didn't have to make decisions. In 2021, stock goes up 30%, comes down, breaks through the 21-day, do I sell part of it? Do I get out of it? What do I do? I'm going to screw up, or I won't make the right choice some of the time.
Right.
And in 2020, you didn't have to make those choices. Just kept on running up with the 10-day line. What? I mean, how hard is that?
Right. Right. Yeah. Everything worked in 2020. It was just it was an extremely cooperative market to say the least. Yeah. And I wanted to ask you, coming to work at IBD, and also just in your overall trading journey, what are some books that have helped you along the way? And outside, of course, I think you're going to mention How to Make Money in Stocks, but outside of that, what do you think really complements that for new traders?
Look, there's a lot of great books, and I realize that I'm just starting to feel more confident enough about like some of the things, like just the basics. I mean, I don't even need to read books to say cut your damn losses. I mean, I don't need another book to do that. So a lot of those things, and so I just am, I'm just starting to read the life cycle trade, because I think that's an interesting look at the way it's a different thing of like the the institutional time period, like the due diligence.
Right.
Yeah, I think that's interesting about IPOs. I've done well with some IPOs, newer ones. And I think that second big move is a smart one. I tried to do that with Upstart. I actually had it for a little while and then finally got shaken out just before everything went fun. So that was great. I have a great portfolio this year of stocks that would have made me a lot of money. So, but that's really the one I'm looking forward to right now. I'm going to go through all of them. David has a bunch of books, and I'm going to buy some more. I haven't, and it wasn't because I don't think they have anything to teach me, but I knew that there were basic stuff. I wasn't, it's sort of like, I don't want to learn the backstroke if I'm still having trouble treading water. I don't want to learn all these tricks. I'm not going to try to do the super karate kid move if I can't, like balance, at all.
Yeah.
So I know that there's a lot of great, stuff out there, and, and definitely listening to all the guests, I realize how much I have to learn. But, I think that's my next stage as I get more psychologically set. I'm doing some basic stuff well, or at least better. And then so I'm thinking that at the end of this year, or in 2022, I'm going to be reading a lot more. So the next time we chat, or like just on Twitter, I could tell you, yeah, I've read this, I've read Minervini's books, and all these things. I'm going to do that. Still pretty simple in many regards.
Yeah, no, I feel the same way every time I interview someone like you or somebody else. I pick something out of the interview, and you just realize that they put in so much work, that there's so many nuances to this that you can improve upon.
Yeah.
And getting a little bit into how you personally trade, you mentioned alternate entries. And I don't know if you want to bring up MarketSmith and kind of show people what you mean by that. But basically, you're not always focusing on that true breakout to all-time highs. You're looking for a little bit earlier within the base where you can manage risk a little bit more tightly. Is that right?
Yeah, and that's been more important in 2021, just because of, there's still a risk that there's the overhead resistance, but with the sector rotation, you just don't know if a group is only going to last, or a rally is only going to last for 4 weeks. You can't wait 3 weeks for the stock to rise up from the bottom,
right?
Come around and then break out, and then it's immediately going to turn over because the sector is, or just the whole market is going to turn over. Obviously, it's nice that we've had 4 weeks of up. That makes all the difference in the world. Let's see here. I'm just trying to think about what I did. This shows you what I did, and it's not necessarily the right thing to do, because because it wasn't the wrong impulse, but then I did very bad things actually holding on to it. But this is Integris, and let me just move this back to let's just say 3. And so let me get myself situated.
Mm-hmm.
I don't know what I was thinking to a certain extent. I started off the first trade, I didn't like, at all. It's like, I bought of all things, I bought here. I don't know what I was thinking. I didn't like this trade at all. And when you think about where the market was, this is just show you where my strategy really, this market, okay, it bounced, maybe I'm thinking we're all going back to the moon again. I don't know what I was thinking. And I got away with it. You could see this market was bad.
Yeah, it was choppy in there.
Weeks.
Yeah.
Choppy in there, and we're not going to get any headway. And so what am I doing here? this stock is down probably 8-9%. And this is where psychological, I was talking to you about this beforehand. The reason why I have trouble selling when I'm at a loss is because this stuff happens. This stuff happens. And it's like, if you're not always punished for doing the wrong thing, you'll keep on doing it. And so like, you'll keep on thinking you're smarter. So this was a bad one, and I held on to it. Now that turned out to be the low. And then I compounded it. I bought some more here. You know, not the worst, but then it took off. This is probably where I should have bought it. You know, the market's pulling up now, or here, somewhere in here. This is where I should have done it. And it wouldn't have been a much more expensive price. That was pretty much, you know, just a little bit more. So I did that, you know, so I wrote it up for a while, and I eventually sold bits and pieces of it. I bought a little bit more. I was thinking, oh, the 21-day line, this is where everything finds support, right? This is where everything finds support. Well, you know, it doesn't always. And so this one wasn't too bad, and I was still up on it. Now it finally takes off. But, you know, I probably should have bought here and then maybe off the 50-day line. So, but I get away with it because that's the way the market is. You know, I sell, I think I sold actually pretty well here. I sold a little piece here because this last buy wasn't very big. So that was actually the one thing I did right. I didn't buy much. I sold that little piece here, you know, and then I sold, then I didn't sell in here because I'm going to hold for the long term. No, I'm finally going to stick through it. And then I finally get out here and here because in this area, I should have sold better. I should have sold in this area. So I just want to show this as an example of, I ended up making, and it's ridiculous because I did everything wrong, I feel, with this one. I made 43%, you know, and it's just like, and it's almost like just I'm an idiot in many ways. But let me see if I can find a better example. Unfortunately, you know, it's just because I was going to show ZIM, which wasn't, I don't know, that was actually a classic breakout. That was one that I feel like I did a better job. I did a better job on.
I missed this one completely. I didn't get any of this run, unfortunately.
I bought this. It was actually, and I swear I wish I could go back and find it, but it was somebody on IBD Live, just a commentator, just somebody, just to say, hey, look at ZIM, look at this stock. And I go, that looks pretty good. That looks pretty good. So right there on the show, I bought a position on this day. So
coming through pivot there, yeah.
Right there in the pivot. So I got that. I actually sold a little bit here. I knew earnings were coming up and it was getting extended from the 10-day line. See, I was trying to sell a little bit. That's okay. I mean, I didn't mind it. I mean, because again, it pulled back some after earnings, but I'd already taken a profit. So I felt more comfortable. I didn't feel like panicking or selling out. And because if it had come back to the buy point all the way, I would have sold, but you know, it came back to the 21-day line. So, okay. And at that point, I wrote it up for a little while, and then I sold a little bit on these days. And I don't remember what the market was doing at the time, but they were starting to get extended from the 10-day line. So I sold a little bit more because I don't know. I mean, how much is this shipping stock supposed to go up, right? We certainly can't have problems with shipping going forward. Oh yeah. So I took this profits. Okay, it moved sideways. Now I'm getting a little cocky. I bought some here, a little bit. I bought a little bit back. So, and now I'm thinking I can do everything. And I even bought some here. You know, and not much, just a tiny taste. And so I had a full position. And okay, this time I said, I'm going to hold this one. Actually, so I sold about half here. Then I sold half here. And, but I actually kept another half. At first I thought I got confused one time on IBD Live. I said I had sold it all, but I hadn't because I had some on another account. I knew better, and then I sold sold on 9.7
Hmm.
and 9.10. They felt like it was getting high, so I think I did better here. And then okay, I held it, and then I finally gave up here. I sold out the rest here, and the market was getting bad. I'm just going to call up the market for a little bit because the
Yeah.
market was, it was getting pretty bad. So I was
Yeah.
trying to hold on to ZIM, trying to hold on. I said, you know what? I know ZIM was holding up a little better, but that's part of the problem I've had taking enough profits in reaction to the market. So this one I sold out on. So with the dividend, I made 74% on this one. I don't know if I'm
Nice.
explaining well enough,
Yeah.
but so this one was pretty good. This was actually a classic breakout, but it wasn't like, it was sort of low in that thing. So it wasn't like way up there. It didn't
Right.
feel like it was that efficient. I know that it looks different at the time. So it wasn't like this tiny little thing, but that's probably the trade I'm happiest with because I didn't feel like it did really anything wrong. I mean, maybe I should have
Hmm.
sold here, maybe I should have just sold out and said walked away, but I had sold some and so I know you need to hold for long time winners. That's always a thing. Again, in 2020, I didn't have to make these choices.
Right.
I didn't have to make choices and make them be the wrong one. They just went up,
Hmm.
and so those were some things that I enjoy, that one I'm happy with because I ended up making money, I think, on all my trades, even the last one, because I sold out, I guess, just before the top of this buy. So
And
yeah,
Ed,
anyway, that's how that one went.
yeah, I wanted to ask you, how would you kind of classify your trading style? Are you more kind of the short-term swing trader like Minervini or Mike Webster style, or are you more Chris Gessel, David Ryan trying to hold for that longer move?
Probably more like Chris Gessel than David Ryan, because I think
Yeah.
Chris Gessel will sell too a
Yeah.
little bit sooner than David. I don't know. I haven't looked over and said, well, how many months? I want to hold on these for a long time, but
Right.
I'm not usually willing to go through a major correction. I
Hmm.
don't have that kind of, I mean, maybe if it went up 150% and I have a really low cost basis and yada, yada, I'll do that. But I, I've generally just moved on, at that point. So I'm not looking for the swing trade so much. And so that it's tricky because I haven't enjoyed 2021 as much, and it's because of that kind of rotation. I mean, I'm having a decent gain this year, so I'll be happy with that. But it's been more of a swing trader type market.
For sure. And just looking at this trade with Zim, it seems like you said, you did a little bit better of a job of selling into strength when you got a little bit extended over the 10-day. And that's something I'm trying to write some rules about and try to trade around that course to try to get a little bit more alpha, sell into strength, and then buy back maybe against a 21 EMA. But yeah, it seemed like you did a good job of that with this one, trading around that core.
One thing is I think that, the M in CANSLIM is the most important thing ultimately. I
Right.
mean, but I think you also need to know, like, there's the uppercase M, are we in uptrend or are we in a correction? But then there's almost like the lowercase m, well, what kind of uptrend? It's like if I said
I
that,
like that. Yeah.
like, Richard, I know you watch Premier League soccer, I do
Yeah.
too, but it's sort of like, this guy's a great athlete, but for all I know, Messi couldn't swing a golf club. You know what I mean? I don't know. I mean, it's like, I don't know. So there's certain things that they can't do, or she's a great student. Well, it's like she's a savant in math, but actually she's not very good at writing, so there's things that you have to know, and this market is obviously different. So that's I feel pretty good about how I'm taking profits, and I'll probably keep doing that.
Yeah.
I probably should have taken even, you know, I could have taken even more profits, but again, I don't want to hardcore, hardcore code my brain into thinking 2021 is the way to go. So I've been trying to sell, like, take 10, 15, 20% just to make myself feel comfortable. And but yeah, I'm trying to write some rules and think about it, but I don't know, because it seems like there's so much variance in it. But what kind of market really matters.
Yeah, and that's where Mike Webster's power trend helps a little bit, right? And like
Yeah.
last year, almost the entire year, we were in that power trend. I think we might actually be getting close to it right at this moment of the rules triggering. I'm not quite positive, but yeah,
Yeah.
do you incorporate that into your process?
I think there's a good rule. I mean, I notice it's like, that's just basic rules, living above the 50-day line, living above the 21-day line. I mean,
Right.
just sort of basic things. I mean, it's a little bit like businesses saying, like, they basically, I only accept people with college degrees. Who cares if the college degree matters or not? It's sort of like this basic thing that businesses do to try to weed out a lot of people, whether it's fair or not. They'll miss some things and they don't care.
Yeah.
We just want to get applications that are pretty good. It's sort of like, I want to, what are you doing trading below the 50-day line much? It's one thing to hold on to a couple of things, but buying stuff, I mean, yeah, I think Charles Harris, and again, who is just so much smarter than I am and had all these things he talked about. I've got all the big winners in the bear markets, but I always lose money because I get enough losers. And it's like, if Charles Harris can't do it,
Right.
what do I mean, what am I think I can do? Yeah, I don't even know what the question was, but that's where I'm going to end. What can I do next to Charles Harris?
No. I was asking about the power trend. But yeah, no, Charles is awesome, man. He's the king of buying the pullbacks and buying weakness, which, yeah, I wanted to ask you kind of, do you prefer buying on the breakouts on strength, or when it pulls back on lighter volume, that's kind of your focus on stocks you want to buy?
It's generally, I buy on, I'll buy on pullbacks that rebound. I want to see some strength.
Right.
I guess my ideal things, and I'm just trying to think of an example because I've done it a bunch of times, but let me, is to buy things where you have that, where it breaks the trend line and is going above the 50-day line, and at the same time, maybe some short-term resistance. I mean, just like, I want to see 3 reasons to buy, like that downtrend, rebounding up the 50-day line, kind of thing. I like that kind of early entry situation because it just provides, there's this sort of momentum that you get, it doesn't always work. I think AMD is a great example. I'm just going to show it, not that it's like, AMD, sometimes it'll happen is that it'll go a bunch of times or it'll fail. And like, just because AMD did it like a half dozen times, it seems like, before going, it's like, it came up and it came up and it came up and then finally did. So just because that seems like an interesting way to go about it doesn't mean it's going to work, and it finally did. So you have to know what's going on. And but that's something I like to have. I'd liked in 2021. I don't mind buying breakouts, and I think if we go to a more stable market, I'd be more willing to buy that. But I probably still will be trying to get at least partial positions early on. And I've had a tendency to just sort of buy everything, get a full position pretty quickly, maybe not immediately, but within the first day, and not tack on, because I don't feel like I'm strategically as good enough with that, like buying and selling. I mean, but I'm trying to do it with a couple of things, but I don't, that's something I'm still working on.
For sure. And just going to this chart of AMD, this is a nice base after the huge volume push up. And yeah, I actually tried this right at this point, as it was trying to break through a pretty short thing right off the 50-day. And then by the time it's set up again right at this level through this pivot, I was on to other things. I completely missed this. But this is a really good example, I think, of where the standard buy point, which is the double bottom pivot 114.49 here, feels a little bit extended to me, while the earlier pivot right here, you can manage risk a little bit tighter in my view. And sure, this time the standard breakout worked and you got a nice push before earnings. But for me, the kind of the better setup in terms of risk reward for me is that earlier buy point, as it's breaking through resistance, coming up the right side of the base. I just like that a little bit more, and that's a nice move today. Bullish out today, it looks like.
Yeah, that was a great move. I mean, really nice move. And so, yeah, I mean, one stock that I do own, it's not doing much, but it was sort of like transitioning up. I bought this FCX, Freeport McMoran. I don't know, but I buy it in here one of these days. I can't try to remember right now, but one of these days. And so it's doing okay. And it's just sort of like, it's honest, it's pretty small position. I think it's about a half position. It's pretty low, in there, but this, because with the commodity plays, I just I want to get, especially with something like that, I want to get into that move quicker. I want to get into it faster, because you don't know, it'll cycle around. And then this, look, it's setting up with this cup with handle. But with commodity plays, it's like, look, if copper goes down 6%, I don't care what the tech, it's not going to hold up. It's
Right.
not.
Right.
I mean, so you sort of got to get in that situation, and which is one reason I've had trouble buying energy stocks, because it seems like I don't have faith in the stocks,
Right.
because I just know it can all unravel immediately. There's nothing. That's I think one thing with growth stocks you like is that they outpace the economy. That's one of the things that's great. Not only do they go faster, but I mean, with Kellogg, if the economy grows 1% instead of 2%, that's killer. That's
Yeah.
terrible.
Yeah.
But it's not that big of a deal for, a company like Roblox or something. I don't know, like it just isn't. Yeah, I mean, sure, they'd like faster growth in the economy. Obviously, anybody would, but it's just not the same. Or a ServiceNow. So, that's just with commodities, it can just go undercut right there. So I'm trying this, again, because I got that trend line break,
Yeah.
got above the 50-day line and the 200-day line. I'm not, I held it through earnings because I was up a little bit. We'll see. I mean, I don't, no, not thinking the world of it. This is just a little bit of trying to diversify the leadership, and we'll see. I'm not gonna, if it breaks through the 21-day line, well, I'll probably be back to even, and I may just get out.
Yeah. But if you're going to buy a miner here, FCX is one that I've traded in the past, and it's one that can move for sure if we really do get a nice trend in the underlying. And you mentioned about position sizing there. How many positions are you usually in at any given time, and what is a half position for you?
Half position would be about 5%. I try to keep it to
5%.
about 10 stocks, and I've gotten up to 13, 14 one time just because I couldn't bring myself to sell. And then
Right.
I'm not paying enough attention.
Yeah.
And, it's like, and again, no, that's just getting crazy. That's just, I mean, I knew it, but I didn't, but since they were working well enough, I let myself get away with that. And I don't know how much I don't think it really hurt me too much in that particular instance, but I think it's just too much to be thinking about. And I can imagine and my job is looking at the stock market. I mean, supposedly I'm doing other things, but I get to look at charts all day long.
Right.
And 13, 14 was like, 10 is more than enough, I feel like, at that point. So if you're an individual who is working and, you can only spend a little bit of time, you're sort of checking in here and there during the workday, and then, studying at night over the weekend, and you've got other responsibilities. Yeah, I think 10 is more than enough. I think you don't want to go with the old O'Neill strategy of just like 4. For one, nobody's like, very few people are Bill O'Neill who can just make the absolute bet and
Yeah.
get Amgen as it goes up 10,000%. But it's just a different world with earnings. You just can't trust. You got these huge moves, and you just didn't have that when, Bill O'Neill was doing the bulk of his trading in the 60s and 70s, 80s and 90s. It was like, that wasn't the same problem. So you could go into earnings not being so terrified.
Right. Right. Yeah, and some people would say that 10 is way too concentrated, but I'm with you. I just can't keep track of 15, 20 names in my portfolio. And if we do have a day where we're seeing distribution, there's a character change in the market, you want to be able to react pretty quickly, and having to sell down from 15 to whatever, which you're only your core holdings, that's a lot tougher than dealing with just 10, 8 names, which you know very well. And you kind of learn the character a lot better when you have less holdings.
Yeah, I completely agree. And yeah, so I need to, just sort of work on that continually, just try to think of that, and just work on the watch lists. I mean, I'm just blessed. I mean, it's like, you're in the community, so you can talk with people, and like, Ross and others are talking about, hey, I'm looking at this and you're looking at that. And, you were talking about some of the stocks you've got, and it's like, they're great. And it's nice having, just looking around, they're doing a lot of the work for watch lists and stuff and building it. And I unfortunately suggested a stock to Swing Trader the other day, and they took it. And so I had to sell mine. And that I should have kept my mouth shut, but that worked out pretty well. I mean, so having that community, building up the watch lists really pays off, to really see that whole picture. And so you're not missing things. And I also use ETFs just so I know which sectors seem to be moving and digging in. And, like if I, was looking at FCX, like when you're looking at software names, I try to, when these things pop up, I also try to look at the other names in the group,
Right.
like if I'm going to buy, and, so, oh, there's other ones, Alcoa and Lithium America are a little different than FCX, so not everything can work, but just the idea of looking around, just so even as I look at it, just so I'll look at things like the MarketSmith 250,
Mm-hmm.
and I'll look at the ready and watch list at IBD Live, and I've got my own watch, and I use those to, supplement my own watch list, and I'll look around the sectors and the groups, I'll toggle in to see how they're doing, which are the, what are the best ones in the group, because this one might be triggering, but maybe that's not really the one I want to be looking at,
Right.
or something better. And I also like to have friends. It's like, it's always nice to have friends. If yours is if this is the only stock in the group that's going up, I mean, okay, maybe it's really special and maybe it's unique and that's fine. But, maybe it's just, if you're going to go out to a bar, you don't go by yourself usually. You go out with friends. Even, of course, you are the coolest one, of course, but you still want to go out with some friends who are pretty cool too.
For sure, for sure. Yeah. I think Ross always quotes me that stat that O'Neill's research said 50% of the performance of a stock can be directly correlated with the strength of the overall sector and group. So yeah, it always gives me a lot more conviction when, say, you're investing in a cybersecurity name that ZS, Crowd, S are all moving together, and you can see that's an overall theme working versus just one particular stock.
Yeah, and that's been a big deal. It's always nice to see how those, and you can see it now with EV stocks. They're all have been blown up. I mean, Tesla's blown up better than anybody, but they're all having a pretty good run, and which is one of the reasons to feel confident about a stock like Tesla.
Yeah, and what do you think of Lucid, by the way? Do you want to bring up that chart? I'd
Sure.
love to hear your take on this one.
I actually bought some of this. I bought it down here, so I
Mm-hmm.
guess this would be one that I bought. Like I think I bought it on this day, and then I started to sit through a little bit of loss. But I think this was a 3/4 position. I don't know why I went with 3/4. I just did. I know. I guess, and so I sort of felt like there was a decent chance there would be a pop when deliveries were announced, if nothing else. And look, this is highly speculative. I mean, yeah, they have no revenue, and that revenue will start coming in. And
Right.
yeah, we'll see. I mean, it's like we'll see. I mean, there's a lot of neat things about the car, so I don't need to sell you the car. But so I didn't add to it because it's like, I don't know, I felt a little bit sort of crazy buying a no revenue $60 billion.
It is kind of crazy, isn't it?
It is a little
Yeah.
crazy. So
Yeah.
I mean, I could have added to it and maybe somebody else had more conviction, but it's like, I don't know. And then, so it actually, this was the day I think they announced deliveries were coming out on the 30th, or that was confirmed. It
Mm-hmm.
didn't have that good of a day,
Mm-hmm.
not really, and so, and so that's reasonable. And you could have even said, well, okay, it could have come back down. I mean, I don't know where it's price discovery. You can almost argue this was almost all nonsense. This is the SPAC land.
Right.
So you can almost just treat this as the real, this is really what the base is, whatever.
Yeah.
So on this day, yeah, that went for it pretty well. And I think I sold it. I don't know. I didn't sell it. I sold about 15%, a little bit above what happened to be the closing price. I'm not,
Mm-hmm.
I don't have it with me. I was obviously moving all around. And so I'm going to just let this one ride for a little while. The 21 day is going to start racing up, and I may use that to try to get out. Hasn't done anything, maybe it'll form a handle, maybe it'll break down. I mean, I could imagine a lot of these EV stocks from Tesla down to Fisker have been moving. So you could imagine, especially with the market being up as many weeks as it has, you could imagine that this could give up, it could go back down to 25 without, I can imagine that scenario. So I like it. I don't know if you're playing this at all.
I didn't catch the breakout at all, but I am watching this. And one thing I'm watching is what I really like about it is this is the highest volume ever in the stock this day right here. So I'm kind of treating this almost as like how you would treat an earnings gap up, where new information came in, institutions changed their mind about it, and then I'm treating this close here as kind of a pivot point. So above it, if we get some more insight days, something like that, form a downward trend line, I might try to manage my risk against that level. But I would like to see us hold above that for sure on a closing basis. But yeah, just has to present a setup. I missed it. I just got to wait for some type of consolidation. I'm probably a little bit quicker, more on the swing trading side of things. So it doesn't have to be too much consolidation constriction for me to have a setup in there. But yeah, this in terms of price and volume has been one of the strongest stocks in the market the past few days. Even though the closes the past 2 days haven't been great, it's held up decently nice given that huge explosion. I don't know if it was up 30%, 25%,
31%, I think, that day. So
Yeah.
that's, yeah, I mean, and they're just delivering things. It's what everybody knew was going to happen. It wasn't even that big of a news. It's like,
Yeah.
I mean, it's sort of like if I said the movie Dune is coming out, and then it's like, and then 4 weeks later it comes out, and it's like, I'm going to bid up Warner Brothers 20%. It's like, but we knew it was coming out. I mean, so, I mean, yeah, so this was great. I mean, look, I don't know how this will go, because I think it's still sort of that price discovery phase. I mean, it's, not having revenue. It's one thing to have another stock, like I own Doximity when the run up, and that one is profitable.
Yeah.
Has strong sales growth. So, you can feel like there's something more tangible there, and you sort of know where it is. But, you tell me where something like Lucid, what it should be, quote, worth. And I'm not trying to say, saying that. So it could go all over this. I mean, obviously, Doximity is richly priced, but at least that there was something that you could put around.
Lucid is just 100% the EV theme story play in my mind. But I mean, the volume where you've got 60 million shares traded at $40, $30, whatever it is. I mean, that's not retail buying, right? I mean,
no, that's somebody big is going to be that. And that's something, that's actually a good point, is that I think that especially with breakouts, early buy points, I mean, maybe not with an AMD, or something, but a lot of stocks, you and I and all of our friends in the universe of growth investors, we can make breakouts or early entries happen.
Yeah.
And then it's just like, well, did they stick with it? That was something, and that's so that's when these low volume breakouts don't go so well. So that's pretty tremendous volume. So that was sort of a nice gift to end the week last week.
For sure. And I gotta bring up Tesla, because you've got kind of a love-hate relationship with this name, and a little bit of beef with Mike Webster as well. So yeah. Tell me about your thoughts on Tesla, and what do you think about it at the moment? It's all-time highs today, although 100% extended from any proper buy point, for sure.
And I think just about anybody would say that. It's like, look, I was saying it was extended several weeks ago because it's been going up and up and up. I mean,
for 11 weeks, 9 weeks.
Yeah. So I didn't like the breakout at the cup base. And it was just because, I mean, it had gone up so many, and I feel this way about all these cup bases, and it's like going up. I just don't trust them, because if this had fallen and gone from 900, it could have easily gone to 800. I mean, that wouldn't have been look crazy. I mean, I don't know. I mean, it's like, or even further. Crazy extended now. I mean, I don't know. And it depends on if you're a swing trader, how much it'll go and all that. I think part of it is that I'm a contrarian.
Yeah.
And Mike Webster really believes in people, and he's an optimist and thinks very well of things. And I don't like Elon Musk. I don't like him, and there's not a reason a whole lot to get into it. I really don't trust. Anyway, I feel like he's said a lot of things that weren't true, and I don't like the full self-driving. So I don't mind other companies hyping out, like Lucid. I don't know, maybe it ends up like it'll plunge 90% because it's wildly overhyped. I don't mind that, because I don't like that stuff. And so I think there's a regulatory risk. I think there's other things out there that I just don't trust it. I could never, one reason I can't buy it, I don't want this stock to succeed, and I don't believe in it. So I would be shaken out too easily. Now, obviously, if I bought it at 800, I would not be shaken out of it, because the darn thing would have run up to 1200. Nothing would have, I mean, I would have, it would have been like 2020 all over again. It's like, how do you lose that? So I don't have a problem with Tesla. Actually encouraged, I think, not that they needed my encouragement, the markets team to, maybe put on leaderboard or swing trader when it got above 730. I felt like that was a good place to buy it.
Right.
There was a bit of a shakeout. After that, it really hasn't had a shakeout. So I don't feel comfortable with it, but look, it has worked tremendously. And so, I mean, just because a stock is extended doesn't mean it can't go up and up and up. I didn't think it was a sell. I just didn't think it was a buy and moy. It's amazing. I don't have anything against TSLA, that's for sure.
Yeah, yeah. And this, along with NVIDIA, I kind of view as the kind of institutional leaders.
Yeah.
So yeah, what do you think about this chart? And this one has also been tremendously strong. I think the track record over the past 5 years is 4,000% or something. This has been a tremendous performer.
Yeah, and this was one I owned in 2020. Got a decent gain off of this.
Yeah.
Sold sort of fairly close to the top, so that worked out. So I missed all this. Looks great. Look, this is almost an ideal situation for me to buy it, and it had this
Right.
split announcement, but I didn't want to buy just before earnings, and I didn't realize how powerful it was. Now I could have held because it rose so much before. There would have been enough of a cushion that I would have kept all of it, or at least most of it. But I didn't, and then I didn't, I didn't get this whole run, and so I feel bad because this was like really what I wanted, kind of situation. And
Right.
that happened with Bros. That was great, but this is great. It's a little extended. I wasn't super thrilled by this move up because it was low volume. So, this was a good early entry here. I think I was doing some other things, so I didn't get this move. I think I might have played it somewhere in here and made a little bit of money. I don't know. I mean, it certainly wasn't, I made a little and not enough. And maybe because it was low volume, I decided to wait, and then it just kept on being low volume until here. And so, that'll happen. I preferred to see some volume on that because but this was a great day, and man, I really like it. It's extended, but not crazy extended. It's nice to see those chip names, NVIDIA and AMD, doing so well.
Yeah.
Because these are really, as you say, real institutional quality kind of companies, going forward.
Yeah, I've missed this move as well. I did trade in 2020. I don't think I did quite as well as you did in it. I got shaken out at some point along the way. But I really liked your point earlier about the three conditions to buy, the three technical criteria. I think you mentioned the DTL, the short-term resistance, and here you've got kind of the 50-day moving average lining up as well. So could you tell me a little bit about what you look for in those circumstances, and yeah, kind of your thought process behind that?
I mean, part of the thing about a breakout is that everybody's happy when it breaks out. Okay, with a traditional breakout. I mean, nobody is a loser, or at least, nobody in the last several months is a loser. So you're not having that psychological need to sell. Nobody wants to sell, and if mutual funds want to buy, they really have to bid up the price, the whole thing.
Right.
Yeah. We all know that. So I'm sort of trying to play that game a little bit with the early entry, is that there's a lot of reasons. I want to get all the technicians wanting to buy it. I know that there's people who may want to sell. And again, I completely missed this move because I was scared of earnings, and that happens sometimes. But I had volume. There was some. There was decent volume, definitely more volume than we'd seen. Breaking the 50-day line, breaking the trend line. There were a lot of different kind of investors could have made arguments for buying this stock.
Right.
Big institutions like to buy off the 50-day line. If you want to buy off of that trend line kind of thing, there's a lot of there's a lot of people who are going to want to buy it in that situation. So it makes me feel more confident that they're going to push it up and get it up to a place where it can be comfortable. And it did exactly that. It came up and then calmed down, had a little bit of a shakeout. And again, I might have bought it, but it's just like, it's getting up near the highs, and it didn't really have a handle. I was too pickety snickety on this one and didn't take advantage of it. But that's okay. I don't feel too bad about that. I miss out on so many stocks, and that's okay.
Yeah, you can't kiss all the babies. Yeah,
that's exactly it.
Yeah. And getting a little bit into when you actually buy. So where's your stop loss usually set on that first day? Do you like to put it at a set percentage? Do you like to use a moving average as your stop, or are you looking at the low of the day, the low of the week, or some other kind of technical area?
If I'm buying off the 50-day line, then it might be like, depending on how, like if I can try to buy it within like 2 percentage points of the 50-day line, I'd
Hmm.
say I'll probably sell about half if it goes like 2% below the 50-day line.
Hmm.
And if it's the end of the week, I'll sell it at that point. If it's like that, if it goes down 3 or 4, and I know I'm looking at 4 or 5%, like 5%, okay, I'm just going to get out at that point, get rid of the rest of it. I want to give it a little bit kind of, it's a back and forth, and I don't know, all those things, because it's sort of like with AMD, you could get shaken out a bunch of times and take those losses,
Yeah.
or you get shaken out once and then buy it. You do how many times, when do you buy it, when do you hold it? There's not necessarily the right answer. I'm trying to do something along those lines to sell part of it. I think taking partial profits and partial losses psychologically, it's not just the saving, it's not just the better things for the portfolio, but if I've already taken, if I cut my loss pretty quickly, not razor sharp, and then I feel better selling at the rest, because even if it comes back up, hey, I already sold a little higher.
Right.
I can feel like it's not, I didn't down tick it. I didn't, and if nothing else, I didn't sell at the absolute bottom on average, even if my last sell is at the absolute bottom, keeping me from holding it, until it becomes a real serious problem.
Absolutely. And as the stock kind of works for you, how are you trailing that stop loss? Do you like you said, do you keep it at the 50-day, or do you kind of move it up as it breaks out and put at the lows of that week of the breakout day? What kind of method do you use?
Well, obviously, it depends on things like, I probably, use the 21-day line a lot for a partial,
Hmm.
like, and obviously it depends on where it is, kind of thing, but I probably use the 21-day line to sell. I use the 10-day line to maybe, like, if it's getting like 20% extended from the 10-day line.
Hmm.
As for some of my sales, I'm trying to sell a little bit in that situation. And that seems to have worked pretty well. I think with ZIM, and I think with Doximity, I did crazy stuff and I held on to it when it was sort of like about flat, but I sold here because I think intraday it was like 20%, and I sold some here, but then I sold about, about half of the rest on this day. Okay, it's breaking through,
Right.
market's showing some trouble, and then I sold the rest finally here. I don't know if that's the right way to go, but I'm trying to, so I use the 10-day for extended. I wouldn't necessarily do that right away. Like, I didn't do it here
Hmm.
because that's early in the run. And you can see that, like a Lucid or a Tesla. Like, I wouldn't necessarily do that if it's right in the beginning. But then after a few weeks, it's like, okay, chances are it's going to pull back. And then I'll use the 21-day to, like, it's breaking, especially if it really breaks. If it had just closed right at the 21-day or a little below, I'll let it ride a little bit. But I'm trying to do that just so I don't get in a situation where it rolls all the way back, and then sell the rest if it's breaking through the 50-day line. And that's
Yeah.
trying what I'm trying to do.
Yeah. Yeah. My style, like I said, I think I'm a little bit quicker than you. If it breaks the 21-day, especially with like negative price action where
All
it's
right.
it's gapping down like this, and you've got high volume, I'm probably just out of it completely. But I like your process of selling some into strength and then waiting for it to really end the trend by breaking the 50-day with your final piece. I think that's a good way to ride that core for the majority of the move. And when we get runners like we did in 2020, that can really, really pay for itself over the course of the long run. And I did have a question. Let me see. Yeah. So tell me a little bit more about how you define extended, because I think this is a problem that a lot of people have. People say this word extended, but they might not have quite the train their eye to the point where they can see visually it's higher than it's ever been before in its price history. So how do you personally define extended from a moving average or within this run? And yeah, how do you incorporate that into your process?
Yeah, I mean, just when we talk about from an extended from a buy point, just it's normally like we talk about a 5% buy range. So we don't want to
Right.
buy it when it's beyond 5%, whatever that is. And in this market, I've tried to keep it as tight as possible. I think we all do. But
Yeah.
in terms of extended, when it's running, like it's just getting extended, maybe you want to start thinking about selling some. I've generally thought about 20% from the 10-day line is where it is. Now, it's not going to always work. There's definitely stocks that have gotten more. We talked about, like in 2020, some of these names were getting 50, 60%,
Yeah.
and it's just like, I don't know what to tell you. I mean, it's like chances are you're going to find a situation where it'll eventually come back down.
Hmm.
I'm trying to think about like Unity. I think had some wild runs. It was getting way up there. I didn't mark down this chart, but like, it was some of these things were getting way above their 10-day lines. That was probably not the biggest one. So, but there were definitely that were getting way up there, and I didn't get into those, so I don't know what I would have done. I probably would
Hmm.
have sold a little early, but a lot of them quickly rolled over, and so whatever you had wouldn't have lasted for long. Like if you said, I'm not going to sell there, well, then where are you going to sell it? When it's 40-50% extended,
Right.
because chances are it's going to have some kind of correction. I'm trying to think about with snow. I think I had a little bit of that, and I actually bought it. I think I bought this one, and did I mark this one down? I probably was foolishly and did not mark it down on the things, but I bought it in here.
Hmm.
And I wrote it, I actually sold some of it almost at the top,
Hmm.
but because it was getting at the intraday, this was probably like 30-40% above the 10-day line. So it
Right.
closed near the low and it was still 17%. I wrote a lot of it too far down. See, this is part of my 2020. I was not, it was coming to an end. I should have sold more of it sooner and all that. So I made a profit, not as much as I should. I'm not as happy with how I did this trade. But it's getting up that high, chances are it's going to come down.
Yeah.
And so I don't feel like selling 10-15% like I was selling like on Doximity or ZIM, like when it gets up that much, 10-15%, on some of these, I think 10% and 15% on these 2 days, that served me well. That's where a lot of my profit was. I may have sold the last was here, but a lot of my profit was in those things. It just was it just felt like it was gonna come down, but I didn't want to do it. It's like, what if this was gonna be the big one? What if this one was gonna go 400%? I didn't want to sell it all.
Right.
I mean, obviously it would have been better if I had, would have been better if I'd sold it all in this day, even if it went
Hmm.
higher than me, because it's like a walk away. I would have had a better gain than if I'd sold it all then. So, selling a winner is the toughest thing. And I don't, and, even Minervini and even Ryan, even I'm sure even Bill O'Neill, you can't be perfect on that. And there's not a strategy that is going to work for all stocks and all markets.
Absolutely. And I think it's interesting you brought up those snow and docs because I treat the IPO advance phase a little bit, going back to the life cycle trade methodology, definitely a little bit quicker than you would now snow, which is moving up the right hand side, because the IPO advance phase, you can see how short that was with snow, and we're talking about this first run from the IPO base or the
Mhm.
first consolidation. That's going to be quicker, but when it fails, I mean, a stock can go dormant for 2 years, just or even longer than that. And then when it emerges up the right hand side, like Peloton, Zoom, Livongo did last year, that's when you can get the more mature run, and that's kind of what we're seeing with Snow here. And I see you've got a marked up buy point here, which would have been a really nice entry into this name. But this could turn out to be a big winner. People still say it's overvalued, but the technicals so far look decent. Although it's kind of wedging up here on lower volume though.
Yeah, I took a position here, because it's so highly valued. I think I may have made this a half position. So I'm enjoying the little run, but you're right. The volume isn't super exciting, but so I uh, wouldn't mind if it consolidated again, because how much can it run up on low volume?
Right.
And I'll have to make a thing, it's like, well, earnings are a long way away. So that was one reason I liked it. The relative strength line is coming up, and so I actually look at the relative strength line a lot. I'm sorry for not bringing it up. I mean, I usually sort of take it as a given. I'm looking at things that have a pretty good uptrend, but I think that
For sure.
just in general, we're
Yeah.
looking for stocks in uptrends. So try not to get in stocks that have been beaten down. This is why IBM will every once in a while show cup with handles. And I was like, I don't want anything to do with IBM. I mean, one of these days, maybe it'll take off,
Yeah.
but I'm willing to wait for that big move and then buying the next breakout when IBM is a magic stock again. But the relative strength line is a really useful tool.
And even if you could bring up INTC, Intel, I wouldn't touch this either. Just look how choppy it is going to a weekly and it's gapping
Yeah.
down. They're just the character of the stock is not right. It's not going to be a huge winner, not a model book stock, unless something vastly changes with the company.
Yeah, I mean, you can see it had this breakout, but it didn't flop, and it even sort of kind of worked. I mean, for a little bit,
Yeah,
but it's just like, what are you doing? And it's like, it's not, this is so obviously not the winner. There's like 20, 30 chip makers that I could probably rattle off,
that are doing
you
so
know,
much better. Yeah,
that have done so much better. And it's just, yeah, you just have to think it. And yeah, the relative strength, it's amazing. And then this will happen. This happens to every stock. And you can't fall in love. There's so many things in stock investing, paying attention to it closely, not falling in love. I mean, if you were going to take this advice about stock investing to dating, it'd be like a super creep. I'm stalking you. I'm going to use you and leave you. It's just like you're a horrible human being, but it makes you a good investor. I think that's
yeah,
the way to invest.
yeah. And I want to hear your take on kind of what you think the growth stock leaders are at this point in the market cycle. Kind of maybe the top 3, 5 names that you or just IBD in general are watching very closely.
I think it has to be Tesla. It has to be NVIDIA.
Hmm.
You know, for more of a slower mover, I think it'd be like a Microsoft.
Yeah.
I mean, that's done really well. I mean, it's just like, it's not, you know, look at that, look kind of base that held up very well in that last correction. I did own this for a while in 2020.
Hmm.
So of course I made money because it was 2020, and you know, that was, but this is one I think that's a positive sign. It's about cloud communities in a lot of areas too. So that's, you know, upstart in that world. And I wish I had sort of a thing about probably one of the, you know, like I feel like there's all these things, but trucking is like, there's so many sectors that are actually doing very well. I mean, it's nice to see the Russell 2000 finally taking off, at least today. Who knows when this posts how to look then, but you know, we're seeing so many sectors doing well. Okay, some steel makers are doing well. The trucking
Hmm.
is doing well. I mean, you know, trains are getting back there, shipping companies, there's some retail names. It's actually that there's actually those kind of things, but and some of those are growth names. But those are like some of the four, like some four institutional type quality. Well, maybe not upstart, maybe not quite as institutional. It's got some names, but I wouldn't. It's definitely more speculative.
Right.
And so those are some of the names that I would say are the ones that are. I mean, I'm not certainly not coming up with any new ones myself. That's for
Yeah.
sure.
Yeah. And for everybody watching, we're recording this on Monday after the close. So yeah, I'll probably get this up Tuesday. So we'll have to see how things turn out tomorrow. But if you could bring up IWM, we were actually talking about this before we pressed record. This had a definitive breakout here on volume. So this is really good to see. And like you said, all these different sectors and areas are working. So it'd be great to have a broad market rally into the end of the year. Obviously, we're a little bit short term extended on the Qs and the SPY, but this is good to see the small caps finally really participating. And it's often a good environment for growth stock traders when the IWM, the IWO are really trending above the 21 EMA, as we saw back in this era right here in 2020.
That's a great point. And yeah, it's a good way of measuring market breadth, I think, just without
Yeah.
having to go through all the things. Just, oh, how's that going? Because that's been an issue. It just keeps on struggling. And so if this could pick up, yeah, because a lot of leading stocks had really good days today when Microsoft and Apple and Google were down. Yeah, I know Tesla helped offset a lot of that, but
Yeah.
the big caps were not having the best day today. And it turned out to be a really good day for a lot of leading stocks. So it's really, yeah, it's always nice to see these kind of names. Financials had a phenomenal day, and the 10-year
Yeah.
yield, I don't think it ended up flat. So
Yeah.
there's just a lot of positivity in the market across a lot of things right now. And so I wish I had, you know, financial, at least interest rate sensitive financials in there, because that might be, it'll be interesting to see how that goes if growth stocks pause, because it wouldn't be surprising after the run some of these stocks have had if they pause for a little while.
Right.
Yeah, it's on the one hand, you would sort of expect sort of a pause or a pullback in certain things in growth stocks, but the market overall is looking really healthy. This was a really good day for the market. So looking forward to it. I will say this, I came into the office saying, I was over the weekend, I was thinking, I'm looking forward to Monday. I want the market to be back open. It's like, that's a bad sign. That's a bad sign.
Yeah,
I'm getting cocky. I'm getting excited. The market's been up for 4 weeks. I'm gonna get killed, aren't I? I wasn't today, so that was nice.
for sure. And I did actually want to ask you about how you take into account into your process the yields, the interest rates, because that's something I'm not super familiar with. But I'd love to hear about your take on how that affects growth stocks and also basically the CANSLIM type names that we like to trade.
I mean, well, like an upstart, just to call it up, just to say that he has a PE of 329, price to earnings ratio. And so people obviously, the whole thing is that in some theoretically investors are discounting massive growth for endless years to come. Well, the higher the interest rate is now, you sort of discount future growth. So, I mean, partly because you could just buy something else, but all of a sudden that if you're discounting at 5% a year, it's totally different than discounting at 2% a year. So
Right.
growth stocks, and especially speculative growth, higher interest rates, it's just a bad news, even if it doesn't really directly affect the company. It's not like, oh, the bond yield's up 5 basis points. It's not going to affect Upstart so much. I mean, I understand that they're involving in lending, so maybe it will, but you get my
Yeah.
point. But to be honest, the bond market, there will be times when it has an impact and times it won't. Like the
Right.
10-year yield came up, okay, sure, it was coming from the bottom last year, off the weekly, and everything was fine. Everything was fine. I'm just going to punch over to the NASDAQ. Everything is fine. Everything is fine. And then right around here, let me call up, 0TNX. All of a sudden, it's not fine. And here's the day, so it's not like if the yield goes up 5 basis points or falls 5 basis points, growth stocks are going to fall or going to rise. But there will be these trends. And all of a sudden, this was it. This was like, okay, people didn't want to take it anymore. There was clearly, or there may be other reasons, but clearly the higher treasury yields, and it kept on going up. And even when the yields came down, the NASDAQ wasn't that happy for quite a while. And this was a big
Right.
factor. And again, so you can't just promise it that it's going to happen, but you have to probably should just be aware of it as a factor. It's sort of like a psychological indicator.
Right.
You should pay attention to the major indexes and the leading stocks, but it's sort of like, if you're sort of tilting one way or another, or it's like, you should be on the watch for it a little bit more. If the yields are skyrocketing, yeah, it's great when the growth stocks can be resilient, but there's so much you can take. It's sort of like you just, and then it comes down. So it's just something, ultimately, if you don't know anything about the bond yields, it's okay. Because like if the market goes down, it goes down. If stocks go down, they go down. It's like, you don't really need to know, but it might just give you a little sense, sort of like, okay, the market's getting a little extended and the 10-year yield is going up. Maybe I should just, thinking about if you're not sure, should I take a little profits? Maybe it just sort of leans that way. It's more like a lean thing rather
Gotcha.
than I'm totally bullish. Oh no, the 10-year yield is up. I'm going to sell everything. No, that's not it. So definitely more of a psychological, I mean, it's not a psychological indicator, but more in that sense that you should pay attention to it and just be aware of it, but not be an all-encompassing, determinant.
Yeah, for sure. That makes sense. It doesn't matter until it does, and that type of thing for sure.
Yeah.
Yeah, I wanted to ask you a little bit about kind of your routines, your daily and weekly routines, and how you kind of set yourself up so you're ready to trade the next week and have identified all those opportunities beforehand.
I go through like the growth 250 and going through some of those things. I do a lot of that during the day because I have to write an article most days of the week.
Yeah.
And so I'm trying to go through these things. And so it's really nice to be able to feed through things. I'm looking for stock of the day. So I go through some of these things. I mean, I don't, and looking at all those stuff. And so I'm just partying down and I'm like, oh, okay, that looks interesting. Like I'll, draw those trend lines. I'll just go in there and it's like, oh, I'll just put that in there and I'll walk away like snow. I put that on there. I don't know if I looked at it for a couple of days. I don't know. I mean, it's like it may not have. I'm not going through tons. I'll go over on the weekend. I'll look at a lot more stocks because I've got time. But during the day, like I'll just go through things and I'm just sort of finding things. I'm marking up, putting trend lines on things I find are interesting. And honestly, when we go over 40, 50 stocks on IBD Live, and I'll look at other stocks on the side if I'm not in charge. And then when I'm writing things, I'm looking around, I go, oh, okay, let's say, Revolve is breaking out. Well, what about, I'll look around other retail stocks. Oh,
Right.
I mean, whatever. I go through a bunch. During the week, it's not as organized, but I go through a lot of stocks and sectors and ETFs. And so I'm doing that on the weekend. I try to just go through them all and really look through that and evaluate my portfolio a little bit more holistically. It's like, oh, wait a second, what am I doing here? Why am I investing here? Or, why did I have too many chip names. What am I doing? Or why am I not looking at these industrial stocks? I mean,
Yeah.
I don't know. So I'll do more bigger thoughts on the weekend. There's more time for that. But I go through lots of charts during the day, but it's a little bit more haphazard. I should probably be more organized, but I think I go through a lot of them as it is. And being in that community really covers me. I'll be honest, because people will talk about it. Hey, look at that. We'll be
Right.
on Teams and so like, look at that. Or, oh, I completely missed that. I should look at that. So, that's a lot of routine because I'm looking for those things. It's really helpful being in, on this organization, looking for assignments for staff. It means I'm constantly looking at stocks, even if it's not what I'm doing, if
Gotcha.
you get my meaning.
Yeah, for sure. And I always like to kind of end things out with this question. So, Ed, what do you think? What advice do you have for new traders who are struggling? Maybe they started last year, maybe they've been doing this for a few years, but they're trying to really cement their process and just improve as a trader. So, yeah, what kind of advice would you have for somebody just starting out?
Yeah, I mean, one is that just sort of basic truisms. One is like you're not smarter than market. And
Hmm.
even if you're smarter, like a nerd being beaten up at school, like you can be smarter than market, let's say, and the market can still pound you into a pulp before you're proved right. Just cutting losses short is so important because you don't even have to do that well. You don't even have to win. Like hopefully you win with most of your trades, but you could get away with like being a baseball player and hit 300
Yeah,
30% of the time if you take 3%, 4% losses on those other ones. Hopefully you have a better performance. I mean, you might be thinking, well, wait a second, my stock picking should be a little better. But if you can do that, then you get a few winners, like even if they're just 20, 40%, those can offset a bunch of little losers. You
right.
lose big, it just is as damaging. So don't do that. Definitely, just so definitely do your work. I mean, just not, and I guess this would be other things. Like another thing is that if you're putting in money, you work hard. Like if you, whatever your job is, if you're a mechanic, you don't let that idiot come over and tell you what to do. I mean, you know that there's real skill. Or if you're a doctor, you know that you went to years of work to get to that, and you keep on learning.
Right.
I'm not going to go on to WebMD and do heart surgery on my son because I did sort of. This is real work.
Yeah.
You're putting in a lot of money. Take it seriously, and because if this is your nest egg or whatever it is, yeah, put in the time. You would put in your time with your job. You put in your time for your career. This is a whole nother thing. Don't fritter away years of your work and just say like a stock tips or be hot and be, put in the work,
Right.
because that's otherwise you're not going to do well.
Well said. And Ed, I want to thank you so much for your time and coming on here. I really enjoyed this, especially talking about the psychology part of things about, oh, should I sell now? Should I sell into strength? That's something every trader goes through and deals with and makes mistakes and tries to learn from it. So I think a lot of people are really going to relate with that and what you said. And yeah, thank you so much for coming on. And I'll have your Twitter link down below in the description. Is there anywhere else people can reach out to you if they have questions? Yeah, is that the best place to contact you?
That is the best place, and I try to be back and forth if people have questions. So yeah, thank you so much for having me, Richard.
Of
This was a
course.
lot of fun.
Perfect. To everyone watching, I hope you enjoyed it as well. If you did, go ahead and leave a like down below and subscribe if you're new to the channel, and we'll see you guys in future videos. Thanks.